I sure hope you guys had a great weekend because we have a massive week coming up in the stock market. Big tech earnings from Apple, Amazon, Microsoft, Meta, you name it. And we have a lot of economic events to pay attention to. We're getting GDP data and the FOMC decision. We have a lot to talk about today, guys. Hit the like button. Make sure to subscribe and join my Patreon if you guys want to keep up with my actual portfolio updates, my trades, investments, all in real time. And if you want to be a part of my private Discord community, all that's linked down below, pinned in the comments, or go to stocsurfest.com/Patreon. And now let's dive into it. So at this point, you guys know we're coming off a rocky week for the stock market where the Qs hit 710 and we closed the week at 684. So we went from 710 down to 684. Big red week for the Qs, down about 3.7% from top to bottom. And it wasn't as bad for the S&P, but it still went from 750 at the peak and we closed at 738. So we lost about 1.5%, almost 1.6% from top to bottom to where we closed the week. So we're coming off of a rocky week. The Qs are breaking a critical level, and you guys know the AI trade has been leading the losses here, causing the entire market to go down. Some indices more than others, obviously, and now we're pretty much at slightly under a critical support for the Qs. And this is a spot where if we really start taking out 680, we close at 684. If we fall through 680, this could be going down to 660, 665. That's what I'm noticing on the charts. What do you guys think? Let me know. I don't want to spend too much time on the indices because, guys, we have 7 stocks to cover, 7 earnings reports to kind of break down. Well, we're going to talk about the estimates, the charts for all these stocks, and I want to quickly go over what to expect for this week when it comes to the Fed and overall the economic releases to pay attention to. So we might as well do that right now. So the FOMC this Wednesday is widely expected to hold benchmark interest rates steady because, of course, this meeting does not feature an updated summary of economic projections, also known as the dot plot, right? Investor focus will center on the policy statement and, of course, the press conference, which I still have to get used to Jerome Powell not being the Fed chairman. So we're going to get Warsh, who last time, his press conference was pretty short. Not crazy short, but it's more, sweet to the point, and he wants the press conferences moving forward to be a bit shorter. So I'm curious to see kind of how that goes this go around. So the focus will obviously be, again, the press conference, the Q&A, the policy statement, and overall what we're going to see here over the course of the rest of the year when it comes to rate adjustments. That's what everybody is focusing on, and the consensus right now is pointing toward keeping rates, unchanged at 3.75%, which at this point, guys, should not surprise you. And traders will be watching the voting split among committee members for hints on whether easing could begin in the fall. We'll see. And following their June rate hike, when it comes to the Bank of Japan, that's another one to watch here globally. Following their June rate hike in Japan, the BOJ is expected to hold borrowing costs steady while giving updated guidance on their inflation target and bond buying trajectory. So don't just keep your eyes on what goes on in the United States, although obviously that is the most important. Japan's big as well. Massive decision coming up from the Bank of Japan. And like I said, advanced GDP. We're getting the Q2 advanced GDP data. The initial estimate for the second quarter economic growth hits this week. Consensus estimates project annualized expansion around 2.3%. Up from 2.1% in Q1, bolstered by enterprise AI infrastructure investments and consumer spending resilience. So keep your eyes on that, guys. That should be pretty exciting here, insightful. And on top of that, there's more, guys. The June PCE inflation index, the personal consumption expenditures report, the Fed's preferred inflation metric, if you guys didn't know, will reveal whether underlying core inflation continues to cool toward target levels alongside updates on personal income and spending. And of course, we're going to get some metrics around labor costs and demand metrics, with key sentiment and cost indicators being on tap, including the Q2 Employment Cost Index, the CB Consumer Confidence, and the June Durable Goods Orders. So big week coming up for the economy, guys. And of course, what's going on in the Middle East, which we're not going to get too deep into that. There's ongoing friction. You guys know that. The Strait is, there's choke points still. And it's a mess, man. So expect oil to continue to go crazy. Maybe it goes higher, maybe not. We'll see. But overall, that's what you guys have to watch out for this week. So with that being said, let's transition now to earnings because, like you guys know, we're in the thick of it. This is it. We're in the heart of earnings season, and this week is probably the biggest week for the stock market. That's the reality, So the first company I want to cover here is Microsoft, ticker MSFT, which last week it did not do well. We hit 403 to start the week, and we closed at 380. So we dropped about 5.5% throughout the week last week, and Microsoft, you guys know it's been downtrending all year, even from the end of last year, and we have earnings on, let's see here, the 29th, which is on Thursday, right? On Thursday, or no, wait, is that Wednesday? Geez, guys, 29th, yeah, that's Wednesday, excuse me. The 29th is Wednesday, 30th is Thursday. And again, this stock's been downtrending. Yeah, we have kind of found a bottom potentially in the mid-high 300s, but that does not negate the fact that we're making lower highs. Clear as day, and this stock really has no upwards momentum anywhere in sight. Each time it tries to run, it gets nailed. And it makes sense. Software stocks have been down the toilet all year, and this is the top dog software company. And let's see what the 3-year chart looks like. It doesn't look too bad, but then again, we are trading under the moving averages. I'm not loving that on this 3-year chart, and we're barely holding the mid-high 300s. So if this breaks, guys, bad news for Microsoft chart-wise. This could be going lower, but how much lower could it go? It's not like Microsoft is an unprofitable company. They're not growing. They don't have free cash flow. I mean, guys, it's Microsoft. They're a great company. They're just in the toilet because of the overall software sentiment, amongst other things. So analysts have them doing earnings per share on average of $4.24 versus $3.65 from last year on revenue of 87? Yeah, 87.67 billion versus 76.44 billion from last year. That would be up 14.7% year over year. Not bad, and actually pretty good considering the size of the company. And look at the max chart. When in doubt, zoom all the way out. This thing is still well above the 180 SMA on this time frame, still above the 50 moving average, and we're holding an uptrend. That matters a lot. It looks bad on the 1 year, but when in doubt, zoom out. So I'm not in Microsoft because, guys, quite frankly, I'm in a good amount of big tech right now, so I don't want to own every stock in big tech. But it's not a bad company. It's not a bad company by any means. So Apple is another one that I don't own at this time, but I used to own it a couple years ago. More than that, I mean, geez, I bought Apple, guys, probably 10 years ago at this point. I sold it, a good couple years ago. Made my money on Apple. I should have held. It's one of those stocks that you got to just hold if you buy it. But again, it goes back to me being in a bunch of tech stocks. I can't own them all, guys, but Apple's been it's been on a tear, considering they don't have crazy exposure to this AI infrastructure build, which is hitting a lot of these other big tech stocks. The massive capex, right? Apple doesn't have really much exposure to that, and their earnings are on Thursday. They have earnings on the 30th of this month, and the stock's pretty much at all-time highs. Isn't that crazy, man? This stock is going bananas, and it makes sense. Again, it goes back to the AI infrastructure. So analysts have Apple doing on average earnings per share of $1.89 versus $1.57 from last year on revenue of $100.8 billion or $108.8 billion versus $94 billion from last year, up around 15.8% year over year. Very strong growth out of Apple. And look, once this company, I've said it before, I'll say it again, once they nail this, this AI Siri, agentic Siri, whatever you want to call it, man, this stock's going to go even higher. That's the reality, and I don't think a lot of that's priced in as of right now. And think about it. If you have an agentic Siri, man, seems like everybody has an iPhone, right? Everybody has this, technology or this smartphone. Once they layer that AI technology on top of it with Siri, which, I mean, it's basic stuff here we're talking about, but that's the next level for Apple in the short term, right? And that's coming. It's coming very soon. It's pretty much almost here, right? So Apple's a key one on Thursday. Amazon as well, which I do own out of big tech. And Amazon's obviously exposed to the crazy CapEx spend. It's gotten hit before over the last couple of weeks, months, due to that. And now we're slipping again heading into earnings, which are coming up on Thursday, same day as Apple. And we're actually trending towards a pretty critical support now heading into the print. You guys can see back in the end of June, so about a month ago, we hit about 225, right? 225, and now we're getting close to that point. We closed at 231 on Friday, and we can see kind of what's going on here. We have lower highs being put into this support of 225. And look, do I want Amazon to collapse? I don't mind it, to be honest. Do I think it's going to go all the way back down under 200? No, unless if CapEx really explodes to the point where investors are like, okay, Amazon, you got to slow down. And on top of that, AWS slows down. If that happens, we might be going low 200s again. Maybe back to 195. And look, I'll be buying a ton more Amazon at that point. So for me, it's like, it's my biggest stock at this point. It's almost a win-win. If it goes down lower in the short term, yeah, it sucks. It's pain in the short term, but it's better for the long term to get an even better, average cost on the stock at a lower price. You know what I mean? So I think the scenario where Amazon goes a lot lower, I mean, it's already down about 10% over the last 2 weeks heading into earnings week. So for it to go even lower, AWS needs to really disappoint Wall Street, and CapEx needs to go through the roof to the point where it really makes investors nervous. Kind of like what's been going on with Meta, similar situation. But I think all the money being spent on Amazon spending is good money for the long term, man. It's gonna pay off. So Amazon analysts have them doing $1.82 on average for EPS versus $1.68 from last year on revenue of $196.18 billion versus $167.7 billion from last year. So expect around 17% year over year growth out of Amazon, and I'm excited about it, guys. And Meta, I also own. Not a crazy position, quite frankly, and this stock's been downtrending all year. We actually called it out here a couple weeks ago, how when that stock saw the pop up to about 690, 700, I told you guys we're not actually breaking out yet. We're still on this channel, and lo and behold, now we're back under 600. So yeah, that was short-lived, that big pop. and it hit 690, 700. Now we're back to 590. So this stock is down into earnings 13% over the last 10 to 14 days. So a lot of these big tech stocks, quite frankly, guys, are set up nicely into earnings. As long as they do well, I feel like the stocks can't go much lower. But again, it comes down to CapEx and kind of the sentiment and earnings in the earnings call, and of course AWS for Amazon, that's big. So Meta at this point, yeah, it's in a downtrend, but how much lower can this stock go? Do I see it going under 500? I genuinely don't see that happening. Maybe it goes back to the mid fives. Okay, but that would be a decent buy in my opinion for the long term. But you guys got to realize Meta, out of all these big tech stocks, is by far the most scrutinized when it comes to CapEx. The CapEx spend, how are they going to monetize it? Investors have the hardest time believing Meta is going to monetize all this spend compared to other names here. So EPS is projected at $7.22 for Amazon on average versus $7.14 from last year, so not much growth EPS-wise. On revenue of $60.26 billion on average versus $47.5 billion from last year. That would be up 27% year on year. Not too bad. Very good for Meta. Out of all these tech stocks, man, it's one of the highest growing. But again, the fact that the CapEx spend is, it's causing investors to freak out a little bit. That's kept the cap on the stock for quite some time. But I think this story develops more and more into 27 and 28. I've said that before. I'll say it again when it comes to Meta. So Bloom Energy is another one, ticker BE. And by the way, guys, hit that like button if you haven't done that already. Make sure to hit that subscribe button. I think 50% of you guys on YouTube watch the content, but you're not hitting subscribe. Hit that subscribe button, hit that notification bell while you're at it so you guys don't miss any content. Bloom Energy, guys, has literally been cut in half heading into the print. They have earnings on the 28th, which is on Tuesday. I think I forgot to mention Meta's day. I think they're on Wednesday. They're usually on Wednesday. Meta is on the 29th, so yeah, that's Wednesday in the aftermarket. So Bloom, like I said, guys, BE is down 50% pretty much from all-time highs in the span of a month heading into earnings. And we'll talk quickly why this is happening right now in this video. So there's a lot going on. CNBC recently featured a segment, I'm sure you guys saw, focusing on investigations that actually challenged Bloom Energy's claims of supply chain independence from China. The network brought on analysts, including Hunter Brooks, Sam Kopelman, to discuss reports detailing the company's reliance, I said that wrong, on Chinese-sourced materials. And guys, these are short sellers, right? Hunter Brooks research, they're short sellers alleging that Bloom Energy relies too heavily on this Chinese source, scandium, which is a key material for its fuel cells. So this completely caused the stock to freak out. On top of that, we're seeing the overall AI trade just get bludgeoned. So these two things, man, combined are just completely setting the stock down. And the report stated that Bloom Energy likely cannot source enough scandium oxide outside of China to fulfill its active backlog, which is causing investors to panic, right? Casting doubt on its capacity to aggressively scale production. And commentators noted that because Bloom Energy has built immense market valuation off future promises to power AI data centers, any misrepresentations regarding basic raw materials could threaten investor trust. So, guys, that's what's causing this panic. Despite the supply chain noise, Jim Cramer, which a lot of you guys joke, you got to go opposite Jim Cramer, but Jim Cramer vocally defended the company. And during the broadcast a couple weeks ago, Kramer actually called the stock a buy and reiterated his long-held belief in Bloom's non-combustible fuel cell technology and pointing to massive infrastructure partnerships with players like Oracle and CoreWeave. So, listen, man, it's a battle. The stock market is an absolute battle between people that are long and short. When you're buying a stock, there's somebody selling. When you're going long, there's somebody taking the other side of that trade. And at this point, Bloom is in the toilet, and it's all coming down to earnings. Is this legitimate? What's the earnings call? What's management going to talk about? And look, we've seen a lot of people debunk what the short sellers on CNBC are talking about. We've seen a lot of people call it a bunch of BS and calling this a buy the dip. And I think, listen, if earnings come in hot, if we get more clarity during the call, I think this is an easy rebound play. Not all the way back to 300, necessarily right away, but it could start slowly moving back there as the overall chart, even though it's down 50%, we're still in an uptrend. Think about that. And the numbers, listen to this. Analysts have them doing 41 cents EPS versus 10 cents from last year on revenue of $827 million versus $401 million from last year. That would be up 106% year on year. Insane growth out of Bloom Energy. And it's all coming down to that call. When in doubt, zoom out as well. The chart looks phenomenal. And it's a stock where you could make a lot of money on the rebound if these claims get debunked even further. I think it could easily be a snapback. This thing is just it's just been eviscerated, guys. Watch out for it. Robinhood, another one. And by the way, guys, if you want to be a part of my, private Discord community, I might as well plug it here. We're 20 minutes in. Check out my Patreon. We're posting not just, in the Discord every day, talking every day, but I'm posting my portfolio updates, my trades, kind of how I think about certain stocks. And, we just talk all the time in the Discord. And if you want to be a part of the community, see me build out that Patreon portfolio. Every week I'm putting in money, right? We're buying stocks. Check it out. Link down below on Patreon, or go to stocksurfast.com/Patreon, and it's also pinned in the comment section. So Robinhood is a massive stock for this week. One of the biggest winners in that Patreon portfolio. I'm in at about $73 a share. We've made a good amount of money. I'm selling calls all the time on Robinhood, right? Premiums are through the roof, and earnings are coming up this Wednesday, and analysts have them doing 42 cents of EPS versus 42 cents from last year. EPS, don't expect anything crazy year over year out of Robinhood, but revenues projected at $1.28 billion versus, $989 million from last year. That would be up about 30% year over year. Not bad. So the story around Robinhood, they're obviously trying to be the financial platform for the younger generation, millennials, Gen Z, Gen Alpha, right? All these young, Gen Beta. I think my son's Gen Beta. He's 7 months old, guys. Robinhood wants all these guys. You know what I mean? And they're doing everything they can, from, retirement accounts to prediction markets to, tokenized, 24/7 trading to you name it. You freaking name it, guys. Robinhood's doing it. And it's all going to come down to earnings. I think this is another great buy the dip opportunity. Not as risky as Bloom heading into the print, but I think Robinhood, all they have to show us is continued growth. They're doing well. And if we get more traction in the crypto market, this is going to be an easy rebound post earnings. We'll see how the crypto part of the business has been doing. I'm curious to see in this upcoming quarter. We shall see, guys. And I'm long Robinhood. I don't plan on selling anytime soon. I think the story has a long ways to go. Mastercard is the last stock for today, guys. And they have earnings on, I think, Thursday, typically Thursday. Yeah, they're in the morning on the 30th. And look, Mastercard is actually gaining some momentum, and we have a cup and handle heading into the print. We're currently at multi-week highs on the stock, and analysts have them doing earnings per share of $4.78 on $4 or versus $4.15 from last year on revenue of $9.08 billion versus $8.13 billion from last year. That would be up 11.6% year on year. Not too bad for Mastercard. It's obviously not a high-flying growth stock anymore, so 10 to 12% top line growth. That's pretty good, man. And that's what they're targeting. And look, if this thing cleanly takes out, I would say 540 to 50, this could start running back towards $600 again. So I'm going to set my alert at 550 here on Mastercard, ticker MA, and we'll watch and see if it's able to break out of there. So, man, 25-minute video, I just realized. We've been in here for a while, but that's because we have a big week coming up. Like I said, a lot of economic events, massive week for earnings. It's going to be a week where our portfolios, especially if we're in tech, man, it's gonna be a wild week. They're going to be running. Our portfolios up, down, left, right, hopefully up. And we'll see how it goes. Let me know your thoughts in the comments, guys. Hit the like button, subscribe, follow along for more content. And again, join the Patreon if you want to be a part of my portfolio updates, trades, private Discord. That's linked down below, pinned in the comments. Or go to stocksurfest.com/Patreon. And with that being said, I'll see you guys in there. Have a great rest of your weekend.